Are you ready to level up your investing game? Discover the secret to maximizing gains in the stock market, even during challenging times. Find out why Warren Buffett's advice is a game changer and how you can benefit from it. Imagine this: the best days for stock market gains often happen when things seem gloomy. It may sound counterintuitive, but that's the truth supported by hard facts. Warren Buffett, the legendary investor, once wrote an op-ed piece for the New York Times during the Great Recession, sharing a simple yet powerful rule that guides his buying strategy. Be fearful when others are greedy, and greedy when others are fearful. These words hold profound relevance in our current financial climate, where fear prevails and presents a golden opportunity for bargain purchases. Let's dive into the facts, for they speak louder than mere quotes from famous investors. Throughout history, bear markets have consistently proven to be the ideal time to invest in stocks. Why? Well, the costliest mistake an investor can make is missing the inevitable rebound. Consider this: from January 2002 to December 2021, the S&P 500 surged a staggering 517%. However, if we exclude the 10 best days during that period, the return dwindles to a mere 183%. There were 10 days in the stock market that were the absolute best, where investors saw significant gains. But here's the thing: if you were sitting on the sidelines and missed out on those days, you ended up paying a heavy price for doing nothing. Now, here's where it gets interesting. 8 out of those 10 amazing days happened during what we call bear markets, which are periods when the market is generally down. The other 2 days occurred shortly after the market hit its lowest point and started to recover. So what does this mean for you? Well, it means that if you choose to stay on the sidelines waiting for the perfect moment to jump in, you might miss out on these incredible opportunities. These 10 days were like gold mines hidden within challenging times. It just doesn't make sense to stay out of the game when these golden moments come knocking on the market's door. If you think of it like you're playing a game, you wouldn't want to sit on the bench while your teammates score the winning points, right? You want to be in the game, taking advantage of those crucial moments when everything aligns in your favor. It's the same with investing. By staying engaged and active, you increase your chances of benefiting from these rare and rewarding days. So, let this sink in. Don't let fear or uncertainty keep you on the sidelines. Sometimes the best opportunities arise during challenging times. By staying alert and seizing those moments, you give yourself a better chance at reaping the rewards the market has to offer. So, get in the game and make the most of these opportune moments. Another important thing we have to keep in mind is that the stock market can be a roller coaster of emotions, swinging from exhilarating highs to gut-wrenching lows. But there's a valuable lesson to be learned from its ups and downs. Some of the best days in the stock market arrive when things seem bleakest. These trying times can actually be the breeding ground for immense prosperity. So instead of letting fear paralyze you and holding back, it's time to embrace the opportunity to grab hold of incredible chances. When you think the market is engulfed in uncertainty and gloom, that's when the true gems of growth and value often reveal themselves. While others are gripped by fear, you have the chance to be the visionary who sees beyond the clouds of doubt. It's not about possessing a crystal ball that predicts every market movement, but rather about having the insight to recognize potential where others falter. Think of it as a thrilling adventure, a treasure hunt where the prize is financial success. Just as other explorers plunge into uncharted territories, you too can dive headfirst into the depths of the market, ready to unearth those hidden opportunities. Don't let hesitation hold you back from grasping your share of the rewards. Remember, fortune favors the bold. In the face of adversity, courageously step forward and seize the moment. Embrace the challenge, embrace the risk, and embrace the chance to turn uncertainty into triumph. The stock market is a wild ride, but it's in those turbulent moments that the seeds of great wealth are often sown. So, let us cast aside any doubts and reservations. Let us overcome the instinct to wait for the perfect moment as it may never come. Instead, let us embrace the wisdom of Warren Buffett and act when others hesitate. By doing so, we position ourselves to reap the rewards of the market's eventual recovery. The next thing to note is that investing in the stock market requires a mindset that focuses on the long run. It's important to understand that short-term ups and downs in the market are influenced by various intricate factors that are difficult to predict accurately. These factors can range from economic trends to geopolitical events, creating a complex web that affects stock prices. However, when we zoom out and consider the bigger picture, the stock market has consistently proven to be a wealth generator for those who are patient and willing to ride out the inevitable fluctuations. This is where the wisdom of legendary investor Warren Buffett comes into play. He once cleverly observed that the stock market is designed to transfer money from those who try to actively time the market and make quick profits to those who take a more patient approach. What does this mean for you as an investor? It means that instead of constantly chasing short-term gains or panicking during market downturns, it's crucial to focus on the long-term potential of your investments. By staying committed to a well-thought-out investment strategy and resisting the temptation to react to every market fluctuation, you position yourself to benefit from the historical growth of the stock market. To truly grasp the importance of a long-term mindset, let's look at some compelling data. The chart below clearly illustrates that the likelihood of achieving a positive return in the S&P 500, a widely used benchmark for the US stock market, increases as the investment horizon lengthens. In fact, research conducted by Cressment Research reveals that the S&P 500 has delivered positive returns for every rolling 20-year period since 1919. In simpler terms, if an investor had purchased an S&P 500 index fund at any point during the last century and held onto it for at least 20 years, they would have made a profit on their initial investment. Understanding this data, it becomes evident that the longer you stay invested in the stock market, the greater your chances of making money. This highlights the importance of starting or continuing your investment journey today. As Warren Buffett wisely puts it, American business, and consequently a basket of stocks, is virtually certain to be worth far more in the years ahead. So why is a long-term mindset so critical in investing? The answer lies in the inherent nature of the stock market. In the short term, market fluctuations can be driven by various unpredictable factors such as economic indicators, political events, or even investor sentiment. Trying to time these short-term movements is an incredibly challenging task, even for experienced professionals. However, over longer time frames, the stock market tends to reward patient investors who stay the course. By adopting a long-term perspective, you can harness the power of compounding, which is a snowball effect that occurs when your investment gains generate further gains. Over time, this compounding effect can significantly boost your overall returns. It's like planting a seed and allowing it to grow into a mighty tree that provides abundant fruits. Additionally, having a long-term mindset allows you to ride out the inevitable market downturns. While market volatility can be unsettling, it's crucial to remember that the stock market has historically recovered from every downturn and continued its upward trajectory. By staying invested during challenging times, you avoid the risk of selling at a loss and missing out on the subsequent recovery. Moreover, a long-term mindset helps you steer clear of the temptation to make impulsive investment decisions based on short-term market movements. Emotional reactions to market volatility often lead to costly mistakes. By focusing on the long-term value of your investments and the fundamentals of the companies you're invested in, you can make more informed and rational decisions. In conclusion, Warren Buffett's advice holds true. The best time to buy stocks is often when others are fearful. History has shown that bear markets and challenging times present opportunities for significant gains. Trying to time the market perfectly is difficult, if not impossible. Instead, adopting a long-term mindset, staying invested, and focusing on the fundamentals of your investments can lead to greater success. So embrace the wisdom of patience, seize opportunities during market downturns, and let time work in your favor for long-term financial growth. Thank you for watching. If you enjoyed this video, don't forget to hit the like button, share it with your friends, and subscribe to our channel for more valuable content. Stay tuned.